Hello, everyone. Welcome to today's webinar, Sales Tax Application in the USA. My name is Laura. I work in B1.lt, a cloud accounting software, and I would like to introduce today's webinar speaker, Rūta Švobienė. Rūta is an experienced indirect tax expert and head of the tax department at One Stop VAT. Her experience includes international taxation issues and regulations in Europe, USA, Canada, and Asia. She focuses on e-commerce businesses and providers of digital services. As we all know, sales tax in the USA works differently from the VAT system we are familiar with. In this webinar, you will learn how economic nexus differs from physical nexus, how to trade correctly in the US, and how to comply with local state requirements. We will also discuss the differences between various sales channels, whether you sell directly through your own eShop or via marketplaces, for example, Amazon or Walmart. Rūta also will help to answer any tax-related questions you may have when selling in the US. And at the end of the webinar, Rūta will answer your questions. So I invite you to take this opportunity to ask your question in the chat section or Q&A section and get an answer from real expert. And I also want to invite you to register for upcoming webinars, which we are constantly planning, constantly looking for relevant, necessary topics that will be useful to you. So Rūta, I give the all attention to you now.
Hello, thank you, Laura, for the introduction. Nice to see all the participants who have joined this webinar. So I truly encourage you to raise any questions if you have any. We will try then to cover them. Maybe you will leave this webinar not only with the basics, but with the answers to your exact situation, if it's possible. Okay, so just not hold on anymore, and let's start our webinar. So today we are going to talk about sales tax in US. Okay, oops. Okay, so as I guess most of you know that in US there are 50 states, and each and every state has different tax regulations. So actually, if you will start analyzing on your own what tax liabilities you might have, or how all the taxation rules work in US, you have to analyze actually each and every state separately, as each and every state has different laws, different regulations, different taxability rules. So you, in a simple way, just saying each and every state is like a different country. So you cannot use one and single rule. If you analyzed, let's say, California state, how it works with your product, what rate should be applied, how that rate should be applied, you cannot say that you know that, okay, this works the same way in Florida, let's say. You have to understand each and every state. Of course, in order here to help you, there is such companies as One Stop VAT in order for you to understand what is happening there. In US, there is a consumption tax that is called sales tax. This is something similar, but definitely not the same as we have in different countries, value added tax as VAT or GST. And from all these 50 states, only 4 of them do not have sales tax at all. So it means that once you do sales in these 4 states, your business does not have any of sales tax liabilities. Actually, when the business has to start investigating the rules, whether they have any obligations in US states. So if you're doing any sales from your establishment country to US, despite the fact whether your customers are final clients or if it is businesses, if you do sales of a digital product or physical product, you have to start double checking whether any obligations are applicable to you. So first of all, to determine whether you have some kind of obligations, you have to evaluate whether you have physical nexus in US states. So what does it mean and what you have to evaluate? You have to if you have your business is established in US, if you have any employee, despite the fact whether it is a salesperson, accountant, or any other employee, or you have your goods stored in any state, it means that you have physical nexus. For your business, this means that you have no threshold to start your sales tax liabilities. So if your business is established in, let's say, California, or you have an employee in California, or your stock is stored in your warehouse in 3PL in California, so it means that from the first sale in California state, you have to start collecting sales tax. Another criteria is economic nexus. This is, I guess, more common situation that the businesses have to evaluate. So what you have to evaluate is your sales made to US states. Each and every state has applied different threshold rules, which are named economic nexus. So you have to track your sales, your turnover to each and every state separately, and not only turnover, but as well you have to evaluate the amount of transactions. All the states has different rules, but in general, mostly the threshold is around $100,000 a year in that state. And some states as well have criteria to evaluate the amount of transactions. So if you are doing sales of digital products, so I guess the first criteria that you will threshold that you will reach is the transactions level. But not the turnover level, because 200 transactions, this is really not much. But in order that all the things not to be so easy, the calculation of the thresholds, economic nexus thresholds, differs again in each and every state. Some states request to include all the sales made to that state. So it means that you have to include all taxable sales, all sales made for sale, all exempt sales. Another part of the states requires to include all sales except the sales for resale. And the rest part of the states requires to include only taxable sales. So it means that you do not have to evaluate non-taxable sales for any type of reason, whether it is sales for resale or it is exempt sales. So all these calculations and the period that has to be evaluated differs again in each and every state. Some states requires to calculate the sales made via calendar year. Another part of the states required to evaluate the last 12 months sales. So there are different 46 rules, just to say it in a simple way. So if your business has determined that you are required to be registered as a sales tax in any of the state, so there is a possibility to choose in some of the states in which way you will proceed with the sales tax registration. I guess 24 states are covered by streamlined sales tax registration system. What does it mean for you as a business? So the application process, if you choose this way, is quite quick. You can apply for 24 states at once. But this does not mean that, okay, so I have applied and that's it. To finalize each and every registration, once assigned sales tax codes are received, you have to create accounts in each and every state where you are registered. And then to submit the returns in these separate systems. So that streamlined sales tax system helps just to do the applications in an easier way. For the rest of the states, and of course, even for these states that are covered by SSTR, as well, can be made that directly within that state. So the application process would be just a bit different. As well, you have to keep in mind that in some of the states, registration has price. So in order to be registered as a sales taxpayer, you have to pay registration fee. Registration fees evaluate from 12 USD to, I guess, 100 USD, around that. These prices currently were not changed. The registration process usually takes around 15 days. This is like official term. But if your business is not established in US, your business is established somewhere outside US. So from our practice, we know that usually it takes around a month. Why so long? Because quite a lot of states still confirms the registration by sending a letter by ordinary post. So you have to receive that letter. So that's why the registration process takes quite a while. So that's why it is really important to provide proper details of your registered business address in order to receive correspondence from US. In order to be registered as a sales taxpayer, there is not much information required. Like in other countries, I don't know, like in European Union, just to be registered as a VAT payer, it is required to provide quite a lot of documents, and usually it's required the documents to be notarized, translated into one or another language. So in US, this is not like that. Actually, only DC state requires to provide documents. Other states do not provide the specific documents, so maybe only the ID of the representative of the company. I guess if I'm not mistaken, the California requests that. But usually in most of the states, what you need is just the information about your business, the amounts of your planned sales, the details about your company, about the representative, the address, the names. Then the really important detail that would be mandatory for you to apply as a sales taxpayer is the EIN code. This is employer identification number. So if your business does not have that number, so our recommendation is always to get that code before registering as a sales taxpayer. For non-resident companies, the process is easier than for US-based companies to get that employer identification number. Just for you to understand what that number means, if I do not have employees in US, why do I need employer identification number? So for your business, this number will be like just a federal taxpayer number. This is not related with any of the employees in US. This code will be needed to submit federal level income tax returns. And the second detail that is actually needed, not at the moment maybe of the registration, but later on to pay the taxes, is US bank account. Why it is so? In US, to pay sales taxes, you have to use ACH direct debit payment method, and for that you can use only US bank details. So you have to be prepared for that. You can do payments, of course, from your company. If you have, I don't know, any company from your structure, then that can do payments in the name of yours company. So you can use that company's details, or in such situations when the companies have no solutions how to pay the taxes. So One Stop VAT offers the intermediation solution to make these payments as well. The filing frequency, I guess the most popular term in this webinar, is differs from each and every state. So each and every state dedicates the filing frequency for each and every company depending on the amount of sales. Only few of the states have just one reporting period like monthly, and there is no possibility to have different filing frequency. In each and every state, you will have liabilities with different frequency, and the deadlines as well differs. Usually, the reporting deadline is 15th or 20th of the month, and part of the states have the deadline the last day of the month. So actually you have like 15 days to prepare to collect all the information to be submitted. Of course, and all the filings are made in USD dollars. Another quite interesting thing about US is that the states are divided into origin-based and destination-based states. What does it mean for you as a seller? This is really important for you to understand how to properly apply sales tax rate on your sales. Just maybe to start with, sales tax sales tax rate is made from different types of smaller rates. So let's say the sales tax rate in Arizona is made from state tax rate, county tax rate, city tax rate, district tax rate, and by combining these taxes, you know the exact sales tax rate to be applied for your customer. So in order to understand what tax rate will be applicable, you have to know exact location where your product will be sent. So this is not similar to that what we know in different countries, that, okay, I know that in one or another country there is standard rate, reduced rate of VAT, and that's it. In US, it is not so simple. So, okay, the registration in one or another state, okay, it is one problem solved, but another problem is to apply proper sales tax rate to your customers. So if we are talking about the origin-based states, what does it mean for you as a seller? So if you as a seller have, you're fulfilling your goods in Arizona, in Ohio, in Pennsylvania. So it means that you have to apply the sales tax rate that is applicable to the location where is your fulfillment center. So it means that it doesn't matter in which location in Arizona, Ohio, or Pennsylvania your goods will be delivered. You will apply the same rate for each and every sale made in these states. If we are talking about the destination-based states, so always despite the fact where your stock is stored, where you fulfill your stock, you have to apply sales tax rate according to where your customer is, where your goods are delivered to. So each and every time, the sales tax rate will differ on each and every transaction you are making in these states. What happens if you are already late with your obligations. Let's say imagine such situation that after this webinar, okay, you are opening all your sales data, you are doing the thresholds calculations, and you see that, I had the liabilities 1 year ago in several of the states, so what I have to do. So actually you have two options to be compliant in US states. So you can use VD procedure. This is voluntarily disclosure agreement procedure. So how it works, you have to inform states on your own that, look, I have indicated that I have reached the threshold. I prefer to be compliant in this and that state, and I would prefer to have this agreement. So if the states agree, it means that you then will be liable only to cover tax liabilities and the interest calculated on the late filing, but no penalties will be applied. Actually, all the penalties will be waived for you. Another possible solution, just to get registered, starting from the date once the liability has erased, and then to pay all the applied penalties and interest. I guess for you to decide how to proceed with the late registrations depends on the amounts of your tax exposure, because VGA procedure takes around 2 months or more to make that process work, and just to get registered with backdated date. All the procedure will be the same as normal registration once the threshold is reached. And to finalize, actually, I guess a lot of sellers are dealing with the sales made via marketplaces such as Amazon, Walmart, eBay, Etsy. So in this situation, if you're doing sales only via marketplace and no direct sales, so what I mean direct sales is the sales made via your own web shop. So you do not have any sales tax liabilities because marketplace is liable to do that on behalf of your business. But if you are doing mixed sales via marketplace and as well via your own web shop, so it means that you have to your sales have to be combined, made via marketplace and made directly via your website. So once you are evaluating your economic nexus, you have to take marketplace sales data and the sales data from your website. And if we talk about physical nexus, and let's say if you use Amazon fulfillment services, so it means that your stock is actually in more than 20 states stored. So at once you will have physical nexus in these states. So it means that no economic nexus is applicable for you. And from the first sale made from your website should be taxed with sales tax in that state where you have stock. So you have to be aware of that and be careful. So if you are only doing marketplace sales, and once you decide, okay, I will start doing sales via my own website, keep in mind that you will have extra liabilities. So this is it from my side from this time. So if you have any questions, we can try to cover them just right now.
Thank you very much, Rūta, for sharing your knowledge and experience. We have one question. What taxes would be applicable in the US if a Lithuanian individual or legal entity purchased real estate in the US through a crowdfunding platform and rented it there? What taxes will be payable in the US on the rental income received from real estate? Is it more profitable to invest in the US as an individual or as a legal entity?
Yes, the question is related with sales tax, but I guess in this situation as well, corporate taxes will be applicable as we are talking about not immovable property. And another thing is that in US, usually what is taxable is everything what you can touch, and as well including digital products. But once we are talking about services itself, like rent or I don't know, consulting services, in most of the states it is not taxable with sales tax rate. So that's why in this particular situation, I think that you will have liabilities for corporate taxes, not for sales taxes. And unfortunately, I cannot advise on corporate tax right now.
Thank you. So that is it. We have no more questions. So thank you, Rūta, again for your valuable insights and your practical examples as well. Big thank you for all attendees for that one question. And we hope this webinar was informative and useful for you. And we look forward to meeting you in the other webinars. Thank you very much. I wish you everybody a very good day.
Thank you. Bye-bye.
Bye.